The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. Appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Hope you're having a great Thursday. Welcome to another edition of Breakout Investing on TFNN, daily on the network from 3 to 4 Eastern Time, just ahead of the Tom O'Brien Show. Busy day for me today. We'll do the show for an hour, a couple of radio interviews, and then we'll be back on TFNN 6:30 Eastern, 3:30 Pacific for my first webinar of 2013. It's going to be called 2013, A Year of New Leadership. We're going to talk about a lot of good stuff, be very educational. It is for subscribers to my Ultimate Growth Stocks newsletter, and for also for people that have signed up for a 30-day trial. So paid subscribers and trialists. So now's a good time to check out 30 days free. Still time to do that, and it's going to be a good webinar. We'll go for about an hour or so. We'll do a little Q&A afterwards, and really just talk about this market, talk about what we're expecting during the first part of this year, the portfolio strategy, how we go about buying and selling stocks, and probably most importantly, help you with a little watch list, get some names out there that we're looking at. So that webinar, again, will be today, 6:30 Eastern. You can get more details right on the homepage of TFNN.com. 877-927-6648. That's the phone number to use. Toll free. Give me a call. Let's talk about this market. If you can't listen to my show live, no problem. You can pick it up as a podcast on iTunes. And don't forget, you can listen to all TFNN programming these days on your smartphone. Just open your smartphone browser, type in tfnn.mobi. Very easy way to listen to the stream 24/7. And Tiger TV, cool feature on the homepage of tfnn.com. Channel 1, the show is carried live. It is archived in Channel 13. And with Tiger TV, not only do you get the show audio, but since it's Tiger TV, you can also look at charts live right along with me. Tiger TV is also viewable on your handheld device. If you want to, look at Tiger TV on your cell phone, just open your cell phone browser, type in tfnn.com, go over on the top right-hand side of the page, click that box with the electronic devices in there, and it will start to stream on your phone. So pretty pivotal day for the market here, getting stronger as the day progresses. Volume has also been getting higher. At last check, we were tracking lower on the NASDAQ yesterday. We saw volume average at about 1.65 billion shares. Looks like we're going to come in pretty close to that, but we were tracking much lower for the better part of the session. Right now we're tracking pretty close to that 1.65 billion, but I think there's a chance we could come in a little bit higher than that today. So if indices can hold gains here, it will be another accumulation day for the major averages. That is good to see. NASDAQ Composite, let's do a little refresh here. We'll see that the tech index is up about 21.5 points, 0.7% gain to 3139. So good day for the NASDAQ. S&P 500 also strengthening as we move along in the day here. S&P 500 up just over 11 points, almost an 0.8% gain to 1484. Now this is kind of pivotal action for the S&P 500. Let's swing over, take a look at a weekly chart for the S&P 500. We'll see that this index, this weekly chart doesn't quite show the whole thing, but in fact, why don't I just grab a monthly here? Go ahead and grab a monthly chart for the S&P 500. We'll see where we're at here. Okay, we'll do SPX. Okay, monthly chart for the S&P 500, and the S&P right now is at its highest level since late 2007. Still has some highs here to get over, but again, we've been talking about the technical strength of the market, and we're just seeing more strength today. So good day for the Nasdaq, S&P 500, both near highs, and the Dow Jones Industrial Average up 109 points at its session, pretty close to its session high, 13,620. So again, volume has been getting heavier as the session wears on here. That's a good sign, some conviction behind the buying. Let's take a look inside the Dow, check in on shares of Boeing. The stock, wild day of trading for Boeing, you can see here, hits a low of 72.68, back up to 75.26 near its session high here. The FAA ordered all 787 Dreamliners grounded due to a risk of battery fires. It's interesting that Boeing has no plans to alter production of the plane at this point. They're currently producing about 5 Dreamliners per month, but they want to ramp that up to 10 by the end of the year. I would say the stock's price action today is realization by the market that whatever the problem is with these batteries, there's only about 50 or so of these Dreamliners in service right now. If they can figure out what is going on with these batteries, it's not going to be a real huge deal to get these new batteries installed on the current fleet of Dreamliners that are in service. And anyway, so Boeing looking pretty good here. Nice positive reversal off its lows, up 92 cents now, 1.2% to 75.26. Been talking about bond yields under pressure in recent days, but not today. Big gains for stocks. That would lead you to believe that money is coming out of bonds, and that is definitely the case. Yield on the 10-year note up quite a bit to 1.88%. The 30-year at 3.07. Let's take a look at a chart of the 10-year yield here, and you can see had been declining in recent days, but a nice pop for the TNX, and do the same for the TYX here. The 30-year, very similar technical structure here. So bond yields moving higher today as money moves into stocks. February gold up $7.60, 0.5% gain to settle at $1,690.80 an ounce. The greenback under pressure today, not by much, down about 0.2% to 79.65. My general take on the dollar and bonds, the technical picture of each still look weak. The chart of gold tells me that, or the chart of the dollar, I should say, tells me that we could see more weakness in the near term for the dollar. You look at a chart of the TLT. This is a long bond ETF. This chart is also in a downtrend here, not really showing any signs to me that it's ready to start moving meaningfully higher. So weakness in bonds, weakness in the dollar, that could continue to help the market here. February crude oil today. Crude oil has been on the move. It was up another $1.33 today to $95.49 a barrel. Let's take a look at that USO, the United States Oil Fund, which tracks the spot price of West Texas Intermediate Light Sweet crude oil. Big move for the USO since mid-December or so. It was trading around 31.5. Now trading at 34.70, up 1.2% on the day, but as you can see, trading near its session low, but a nice gap up as well for the USO today. We did have quite a bit of economic data earlier today. 2 good pieces of data, 1 not so good piece of data. Start with the good news. Weekly jobless claims down 37,000 to 335,000. The prior week was revised slightly lower from 371 down to 370. The 4-week moving average of claims still near a 4-year low at just over 359,000. So good news there. And boy, the housing data just continues to look pretty good here. December housing starts rose 12.1% in December to 954,000 units. That was well ahead of expectations. I think the highest level since the summer of 2008. Estimates were for a smaller jump to 889,000. So big beat there on December housing starts. Building permits kind of tame, mostly in line. They rose 3,000 to 903,000. Again, mostly in line with expectations there. The bad news, the January Philly Fed. I remember yesterday the Empire Manufacturing Index came in at minus 7.8 when economists were expecting a positive reading of 2. It was same situation with the January Philly Fed today. It came in at minus 5.8 from a downwardly revised 4.6% in December. So that was worse than expected. Some earnings reports to go over today. Let's take a look at shares of eBay. eBay having a good day today. A little gap up for the stock here, up 2.7% to 54.32. The numbers, didn't jump out. eBay had pretty good numbers, earnings up 17% to 70 cents a share. That was a penny above the consensus estimate. Sales up 18% to $3.99 billion. Estimate $3.98 billion. Investors encouraged by the company's performance at PayPal. Again, sales there up 24% from a year ago to $1.54 billion. And active PayPal accounts increased 15% to 123 million. Revenue at eBay's marketplaces division rose 16% to 2.05 billion. So investors clearly pleased with the business momentum going on at eBay. So nice results there. Let's check in on some financials today. Start by taking a look at the Financial Select Sector Spider Fund. Holding gains smartly here after a recent breakout over 1670. Not really making a whole lot of movement over the past week or so, up 4 cents today, 0.2% gain to 17.18, lagging the market, kind of weighed down by results from Bank of America. Because Bank of America very extended going into today. You're just seeing the early stages of a consolidation here. The breakout in Bank of America was over $10 a share. If you didn't buy there and you were chasing it up here, that's not the best way to do it. Buying at the breakout here over 10 was fine. You've got a nice cushion. You can sit through a little consolidation. But B of A under some pressure today, down 3.7% to 1135. Its 50-day moving average here is at 1060. That is still above the last swing point around 10, but earnings at Bank of America, very cluttered earnings report. Hard to understand how the company, it's just so many moving parts to it, but looks like earnings were up about 5% to 21 cents a share. Sales, on the other hand, down at 25% from a year ago to 22.3 billion. So Bank of America weighing on the XLF. And let's see, we also heard from Citigroup. Let's check in and see what Citigroup is under. At last check, this was under pressure as well. A little gap down for Citigroup. It is lower by 2.8% to 41.28. Another extended financial here, headed into earnings. It was not a buy, up around 42. Last swing point here, there was a couple of them. I mean, you could have bought it right around 38. And you also could have bought it over 40, but the numbers at Citigroup earnings up 57% to 63 cents a share. Sales were flat at 22.8 billion, but stock under pressure today. Stick with me, folks. Headed into the first break. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing. Right now, the Dow up 100 points to 13,611. NASDAQ Composite up 19 points to 3136. And the S&P 500 up just over 10 points to 1482. You know, you'd think on a nice day for the market that we're seeing today, I would be eagerly looking to add to positions in the Ultimate Growth Stocks model portfolio, but I did not add to anything today. I'm overall encouraged by what I'm seeing in terms of price and volume in the major averages. I think we possibly have more room to go here to the upside, and I'm actually open to going long a couple more names at some point, and I certainly want to add to some positions that we currently have, but virtually none of the current holdings, since they've been moving higher and higher and higher, are not in position to add to at this moment because many stocks are extended. far past proper buy point. So the time that I'm really looking to add is during the next market pullback. And if we don't get a pullback in coming days and we keep kind of moving higher here, well, we'll let what we continue to own work and keep an eye out for new buying opportunities and kind of expand the long exposure. During market uptrends, it's not really the time to be short individual stocks, but we still have one short position open. We've given back some gains, but the current holding is still in a downtrend. I've been mentioning it in recent shows that we may have to cut it loose if the market continues to act strong here. But right now, 8 long positions and 1 short position in the Ultimate Growth Stocks model portfolio. Again, webinar coming up at 6:30 Eastern today at tfnn.com. You still have time to sign up. You have to have a 30-day trial to my newsletter or be a paid subscriber. So right now is a good time to be a 30-day trialist, because you can check out the webinar later today. So I talked about kind of sluggish movement today in the XLF, the Financial Select Sector Spider Fund. Really the 2 leaders in the financial sector right now would be, you'd have to give that honor to Goldman Sachs here. But again, Goldman extended after a recent breakout over 130. So this is a stock that, on a pullback, is low volume pullback in particular, would be attractive. And JP Morgan Chase, same situation. Stock that is extended here after a recent breakout over 44. Kind of a lesser-known financial that reported earnings today. Let's take a look at Fifth Third Bancorp, because this is just a beautiful technical breakout here from a cup with handle base. The breakout was specifically over 1577. That was the swing point, high point in the handle area here. But you can see the blue volume bars here. Definitely a stock that's been under accumulation for a little while. It looks very, very strong here. FITB is the symbol here on the NASDAQ. Fifth Third Bancorp having a great day, up 4.4% to 1623. Currently trading at 1623 with a swing point at 1577. This one is not extended in price yet. So we take a look at a weekly chart for FITB, and what we'll see here is just a nice symmetrical cup with handle base, and this one still could be in the early stages of a move. So can the financials continue to assert leadership in 2013? I think there's a good chance, but Goldman Sachs, JP Morgan Chase, you want to get pullbacks in these. We talked about Bank of America and Citigroup earlier. They are in the early stages of consolidating here. So I would tread cautiously with financials right now, and but Fifth Third looks to be a nice technical move in the sector today. Taking a look at some other earnings plays here, NTCT, NetScout Systems, NTCT. Kind of a wild day for NetScout Systems, down 5.6% to 2563. This is a company that makes performance management software applications for high-speed networks. Issue here is that you kind of had a lukewarm earnings report, definitely kind of a higher multiple stock here, showing relative price strength ahead of earnings. Earnings up 3% to 36 cents a share. That was a penny better than the consensus estimate. Sales were up 10% to 91.6 million. That was about 1 million better than expectations, but I think the market kind of looked at it as kind of middling earnings report. NetScout is trading very close to its 50-day moving average here. 25.63 is the last price for NetScout, down 5.6%, holding just above that 50-day moving average. Wild price action like this looks like a, well, not a stock that is buyable at this point for sure. Very erratic price action in NetScout. All right, we're going to talk about some chip makers, semiconductor stocks when we come back. Stick with me, Ken Shreve on Breakout Investing. We'll be right back.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks. Don't forget another fun thing going on at TFNN.com is the Great Panther Silver Super Silver giveaway. That's going to be taking place from every broadcast hour from January 28th through February 1st. Your chance to win a free piece of silver. And again, starting January 28th through February 1st from 9 a.m. to 6 p.m. Eastern. That is all live programming on TFNN. Every hour, a lucky listener will win a free piece of silver for your chance to win. Free registration right on the homepage of TFNN.com, and kind of a cool deal. So be sure to take advantage of that. I was talking to a colleague today and called me saying, God, I can't believe how many people are trying to make the bear case to their clients. And we were talking about the market, and I reminded him that there's just nothing in the way of sell signals out there. So at least as far as I'm concerned, there's no reason to be too quick on the trigger here. And while I can see the argument that once fourth quarter earnings season is over, and we've been talking about the fact in recent days that I think that the earnings, the good news in fourth quarter earnings is going to have the upper hand over bad news, which is why I think this market can still work its way higher from here. We do need to just at least be prepared for the possibility that once the focus turns away from fourth quarter earnings and possibly to politics on Capitol Hill or to Europe or economic data, whatever it is, that could bring some sellers into the market. When you look at the number of extended stocks out there, believe me, there's enough individual stock charts out there that tell me that a pullback could easily happen. But you don't want to make decisions based on what you think might happen. You want to just kind of let the market be your guide. And with very little in the way of sell signals at this point, I think it's prudent, if you have stuff working, continue to let it work, and then when the pullback does come, gauge the nature of the pullback. I mean, there is a such thing as healthy, constructive pullbacks, and then there's a such thing as unhealthy, non-constructive pullbacks. And the latter, what you see is a lot of technical damage done in the market. Not only do you see major averages coming down in heavy volume showing distribution, but you also see stocks that have been leading the market higher since late November, December. You see these stocks start to break key moving averages. So again, when it comes to current holdings in my Ultimate Growth Stocks model portfolio, when that pullback does come, I'm going to watch how some of these names behave when they come down to support. If they, bounce, if they come down to support in light volume, not really showing anything in the way of sell signals, and they find support, I'm probably going to add to some of these positions. But very important to know the difference between a healthy pullback and an unhealthy pullback. Listen, no one would be surprised to see the market come in here. I mentioned when the S&P 500 has moved above its September highs. Okay, we talked about the fact that it could, you could see one last little shakeout before a breakout. Let me pull that S&P 500 chart here. You could see one little shakeout before a breakout, and we never got it. But now that it's above the September highs here, you actually could see still a shakeout here in preparation for potentially more strength. But if you get a low volume pullback, I don't know, down to 1450, 1455, something like that, and maybe even a little bit more. If it happens in low volume, that could just be the last shakeout before a new round of money comes in from the sidelines. It still could happen with the NASDAQ composite because the composite is still sitting underneath its September high over here. So you could get a little handle area form here. When you get these little market pullbacks, it's just going to give some of these big market leaders, we talked about the financials, the Goldman Sachs, the JP Morgan Chases, the home builders. We had that great housing start building permit data earlier today. The home builders continue to work nicely here. Check on the ITB, up 2.7% today to 2269. The bottom line is that this one, I don't know, I mean, you could call it a breakout here over 2150, but let me just do some, we do 2269 minus 2150. You're 5.5% above a swing point right here, so you're already a little extended on the ITB. And frankly, this ETF has been basically running higher since July. So when you're in a market uptrend, you're not going to be able to catch every single every single ETF and stock that's moving, of course. But the home builders right now, they've been running for so long, it just seems like a crowded trade. But it continues to work. But the ITB, the 50-day moving average down around $20.75. Next market pullback, you could easily see it come down to that level. Taking a look at Lennar, similar chart here, had a little breakout over 40 recently. Not seeing much in the way of accumulation here. In fact, you see a lot of big red volume bars here. This was under distribution for a while. Issue here is you're just not seeing, robust signs of accumulation in the stock. And the reason is it's been moving higher for quite some time. So I'm still cautious on the home builders. Even if they continue to work, I'm not going to get too concerned about it because there's so much working right now. There are plenty of profit opportunities out there if you got in the right stocks at the right time. So but I just wanted to talk about the prognostications going on, like what the month of February is going to look like and what the month of March is going to look like. Obviously, it's very tough to say. People try to get cute. They try to predict what's going to happen, and the market just can't keep moving, can't keep going. Too much uncertainty out there. Yet very little in the way of sell signals at this point. Mentioned the semiconductors, Taiwan Semiconductor Manufacturing. We had heard from this company. They had earnings. Very solid numbers. Another extended stock out here. Taiwan Semiconductor Manufacturing, earnings up 25% from a year ago to 25 cents a share. That was in line with expectations. Sales also in line, up 27% to $4.47 billion. Very similar situation to ARM Holdings here. Taiwan Semiconductor Manufacturing, about 54% of their fourth quarter sales were in communications chips, and so they're benefiting from this mobile push. And ARM Holdings also positioned smack dab in the middle to fast-growing areas of tech right now, mobile devices and tablet computers. But look at a weekly chart for Taiwan Semi. I think I've got one saved here. Well, as a matter of fact, I don't, but I can pull one up here quickly. TSM. Taiwan Semi. You can see the big move this stock has made already. A weekly chart, very similar to ARM Holdings. Now, if this can come down to its 10-week moving average, which right around 17 and a quarter, that'd be $1 less than where it's trading now. I wouldn't be surprised at all to have it find support. But frankly, after the move that it's made, it would be better to see this thing form a base. So this is where we're disciplined. We're not going to chase a stock here that is extended, just like we're not going to chase ARM Holdings, ARMH weekly chart, and you can see very similar setup to Taiwan Semi TSM, another stock that is extended here. Maybe it comes down to its 10-week moving average, 37.68. Looks to me like this would be the first pullback after the breakout right here over $30. So maybe nibble here at 37.68 if it comes down that far and finds support. So just want to be very careful not to chase a lot of these stocks. ARM Holdings, Taiwan Semi. I mean, they're literally they're a dime a dozen. So when you have a strong day for the market like today, it doesn't mean that there are scads of buying opportunities. In the oil and gas space, let's check in on Continental Resources. We mentioned earlier in the show that oil prices have been on the rise. Crude oil settled today at $95.49 a barrel. Kind of a hesitant move for Continental Resources today. This is one where, a breakout over 82 could be in the cards, but, not much volume in the stock today. It is trying to break out over a swing point, but just no conviction behind the buying. Good technical setup here. Really would like to see meaningful signs of accumulation in this stock. Not out of the question that it could take out its September high here around 84, but let's see some volume come in here Continental Resources looking good, up 76 cents today to 82.40. So during the webinar today, we're going to talk about more opportunities in the oil and gas space. I think this is a group sector in the market that could do well in 2013. But again, a lot of it's going to be predicated on what oil does. I mean, if our economy grinds to a halt like everyone's expecting, remember fourth quarter GDP growth expected to be, I don't know, about 0.5%, maybe 1% growth in the fourth quarter, and then looking out for the full year in 2013, you're looking at about 2% growth, which is below mean, still sluggish growth. But if there are signs that growth is picking up, you might see some of these energy stocks continue to come back to life. So it is a sector that I am going to be keeping an eye on for emerging leadership. Some headline stocks today. Let's take a look at CBS. CBS Corporation, big gap up for the stock today, still up 8.4% to 41.14, but at its session low, believe it or not, it hit an intraday high of 42.55. The news here is that CBS wants to convert its outdoor advertising biz, billboards, things like that, in the Americas into a real estate investment trust. A lot of tax benefits to doing that. So CBS having a good day today, even though, again, still up 8.4%, but trading near its session low after early strength. Let's check in on shares of Williams-Sonoma, too. This is a retailer that is under quite a bit of pressure today. Let me just check on one thing here. Williams-Sonoma down 4.9% today to 44.81. Stock gets hit with a downgrade today because they lowered their fourth quarter earnings outlook. They're now looking for profit of $1.21 to $1.28 a share. Current consensus estimate at $1.30. Total revenue, they're looking at 1.36 to 1.4. Estimate right now at 1.4. Raymond James downgraded Williams-Sonoma to market perform from strong buy. Again, interesting dynamic going on in the retail space here. You've got the XRT that is just on the move here. Technical breakout for the XRT, but you've got names like Williams-Sonoma under a lot of pressure. We mentioned Lululemon, a former leader, under a lot of pressure here, technically looking very weak. Ulta Beauty, a lot of these big retail names still under a lot of pressure. But again, that's what we're going to talk about on the webinar later today. Not staying married to the old leaders, because old leadership eventually gets ushered out of the market and new leaders come in. So I have serious questions as to whether Lululemon, Ulta, some of these other big retail performers are going to be able to continue to lead in 2013. In fact, I tend to doubt it. Doesn't mean I don't think some retail stocks will outperform, but I'm going to be looking in stocks in the early stages of a move, stocks with strong fundamentals, technicals that are still in their early stages of a move. I can't say that with Lululemon and Ulta. Okay, so that's my little retail spiel here. Let's check in on shares of Apple. The NASDAQ doing pretty well here today, but Apple not participating after a dead cat bounce yesterday. Shares of Apple down $2.70 to $503.39. Still a lot of technical damage that Apple is going to have to overcome. We're actually going to hear from Apple next week when they report earnings. I want to say it's Thursday, but I am not positive about that. Remember that Apple is expected to post a decline in quarterly earnings growth. Right now, they're expected to earn $13.41. That would compare to $13.87 they earned in the year-ago quarter. Sales expected to be up 18% to $54.7 billion. So concerns about slowing growth here. That's basically at the crux of why Apple is acting so weak. I think they are legitimate concerns. Headed into the final break, folks. Stick with me. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks. Headed into the close here. Put the finishing touches on Thursday's session. NASDAQ Composite up 18.5 points, trading off its high, right in the middle of its intraday range here. Last trading at 31.36, and the S&P 500. Let's see what that one's doing. Off its highs a little bit, still in the upper half of its range, though, up close to 9 points to 1472. And finally, the Dow Jones Industrial Average It is up almost 91 points, trading in the upper third of its trading range, holding near highs, up 0.7% to 13,601. With the S&P 500, the Dow, or really the NASDAQ and the Dow that have not broken out over their September highs yet. The S&P 500 is slightly above its September high. I just don't think it's prudent to be too bearish at this point. If you're bearish and you're shorting stocks, you're arguing with the market trend right now, and it could work. But the way I tend to do things is just kind of let the sell signals, let the market present the sell signals, and when you start to see them and when they start to become overwhelming, then that's when you can kind of make some decisions. But if you bought stocks at the right time, you were buying stocks in November, December, maybe even bought them in early January. Either way, you're sitting on nice cushions. You can afford to sit through some pullbacks here. Now, talked earlier in the show about the nature of the pullback. If you start to see meaningful signs of institutional selling in the market, it doesn't really make sense to watch profits completely fade away. So if you're seeing weak technical action in the market, trim some positions, maybe take full profits in some positions, but you got to be proactive. You got to be nimble. You got to manage. So, but right now I'm just not seeing anything in the way of sell signals. Mentioned the volume today. It's never great. Everybody wants to see more volume in this market, but it was light earlier in the day. It has been picking up the pace here. NASDAQ volume tracking a little bit higher than what we saw yesterday, 1.65 billion shares. Maybe we come in at 1.7, something like that. NYSE volume tracking about 15% higher than what we saw on Wednesday, which was 597 million. Very, very light volume on the NYSE yesterday. So is this a market under meaningful accumulation? I would stop short of saying that. I think some money has come in from the sidelines. I think there's room for more, but again, a lot of it's going to be predicated on what earnings look like. I think what Apple says on Thursday, what that stock does, is going to, have a lot to do if, the NASDAQ is eventually going to make a move over its September high. It's probably going to take a strong earnings report from Apple, or better than expected earnings report from Apple to do that. Coming up after the close today, let's take a look at shares of Intel. The chip maker is going to be out with fourth quarter results. 45 cents a share is the consensus estimate. That's down 30% from a year ago. Sales down 2.5% to $13.5 billion. I think there are some interesting stories in the chip sector. I'm not expecting Intel. Intel is probably going to be a market performer in 2013. It has been in rally mode ahead of the results and up nicely today, 3.1% to 22.79, but significant resistance at that 24 level. Buyers starting to come back into the stock, but still a lot of technical damage done here. Also, after the close, American Express. We saw preliminary results last week from the company. We have a general idea of what the company is going to report, but we'll listen to what AXP has to say after the close. Tomorrow, GE and Schlumberger. Have a great day, folks. Webinar at 6:30 Eastern today, and see you tomorrow. Bye.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.